This is our Forex blog for August 15, 2011, and we're using our new FX Trend Pro in order to find the strongest currencies to buy versus the weakest. This tool is incredibly fast, and it blends together 4 different statistical trend tools. One of them uses a Fisher transform, which is very fast in picking the next trend direction. Sometimes moves even before 1 or 2 bars before the real the move happens. Another one measures the intensity of how far each currency is moving every bar, compares it to the last 20-day average for each bar of the day. So during volatile times, the market really has to move in order to get strong readings or weak readings. And the other two also measure the direction. So there's 3 tools that measure direction, one that measures intensity. They're averaged together, and this gives you a new FX Trend Pro. When you have a reading of 80 and above, it's extremely strong. And when you have a reading of 80 and above where the daily, weekly, monthly trend is all strong, and you can see this one had brief amounts of strength, weakness, but the last amount of weakness was far less than the intense weakness before, and then we have some extreme strength. Usually when traders aren't selling the euro much at all, it's slowly drifting down, but not with much intensity. And then it explodes up, and it matches all the time frames. It's pretty much a no-brainer to trade. You want to buy this strong euro from 7 until really about 10:30 against some of the weakest ones. You have a relatively weak Swiss with 40 minutes of intense strength in there. The New Zealand is weak during that time. The dollar initially is strong and goes weak a little bit before 8, and especially at 8:30 for a couple hours. You have the yen and the dollar is much better to sell against compared to the yen, because the yen's weekly monthly trend are clearly up. So you want to trade one that's weak on all time frames versus one that's strong. So basically looking at 7 o'clock and later, buying the euro dollar, buying the euro New Zealand, and from really 7:20 to about 8:15, because the Swiss is weak on all time frames except the monthly, buying the euro Swiss. So let's start and just showcase a regular 5-minute chart from 7 o'clock onward. Notice also the euro is above the hourly, and pretty much was the entire day. Here's a 15-minute moving average. It breaks above there, and it's in a nice little sideways rectangle pattern. I'm going to, in our regular class, use range bars, but for illustrative purposes in the blog, just stick with 5-minute bars today. And you can see it broke out. At 8:30 also is one of the stronger ones, and it just keeps going up. When you have a strong trend like this, it's very hard to know when to get out, but you can use any of our trailing stops: chandelier trailing stop, FX and stop, parabolic stop. You can draw a trend line underneath the bar's lows, and when it gets broken, get out. If it makes a wave up and then kind of stalls, you can usually draw your fibs on that, and it gives you a pretty good idea of where the fib targets are. The outer containment bands usually contain price, and if you see it going up with a lot of strength, a little bit of weakness comes in, strength again, and then the strength disappears from 10 to 11, you have a red bar right here, you might want to just get out of your trade. But anyway, the euro was one that you're looking for buys all the way back here from 7, and it also broke from underneath back to above the hourly, and therefore it went up. Remember, the Swiss was also weak, just like the dollar, from about 7:20 to 8:15. So from 7:20 to 8:15, you could have focused on buying the euro Swiss. Notice these tools on the individual chart went green right here at 7:05. The Fisher transform, which is one of our new tools, also flipped up right here, and it's kind of going sideways. You wait for a breakout, and you can see it went from 76 all the way up to 46. So almost a 75 pip move. So even if you got out of this real quick right here, you made 20 or 30 pips. You have a nice little pullback right here. This is a little bit clearer on a range bar, and I'm going to go over that in our regular chart. Regular class. But you can see it continued its trend up. It hit the 15-period moving average, found some resistance there. You might want to tighten your stop underneath. Once it stalls and goes sideways, tighten your stop underneath there, and you get out. If you got this second trade right here, you still made about 20 pips. The third one that was weak, the weakest on all time frames, and it really was weak from about 5:30 was in New Zealand. But the euro became really strong at about 7:15, 7:10. So Euro New Zealand after 7:10, just to give you an idea. Now this one, again, had on the individual currency chart flipped up here at 6:40. So you had extreme strength. Um, it's above both the hourly and the 15-minute moving average. It's kind of going sideways here. And you probably, if you were watching and trading this pair, which very few of us actually do most days, it's not one of the 10 most popular currencies by any means. But it breaks out right here, and you can see this bar right here is at 7:15. So even if you got into this bar late and waited for it to go a pip above this bar's high to get in, you're in this trade at 71. Let's just round up 2 more pips. I'm sorry, 72. We'll round up a few pips, 72.20. Notice, the extreme strength here. It's starting to lose some momentum. Maybe you want to get out of half your trade or tighten your stop underneath these bars low. So let's say you got out of your trade right here. You're in it at 70, 72.20. We're going to round up 7 pips. And out at 72, we'll round up a pip here, 60. So you just made 40 pips. And it's going sideways with very little weakness. A lot of times currencies go up and they have kind of what's called a flag pattern. I prefer a 15 to 25 pip pullback, and then when it starts to go back up, you can go long with higher chance of making money in those type of trades, in my opinion, because a lot of times they'll go up and double top, and even when the trade doesn't continue, you can make money. I don't like buying flags as much as pullbacks. You can see a little bit of weakness here. It's subsiding a little bit. Alright, so if you took this trade here, it's not the best trade in the world because of the intense weakness on that one bar, but it hasn't gone up too far. At 8 o'clock right here, you can see the New Zealand is weak again. Your stop's underneath the low. You now have a Fibonacci profit target to shoot for, and as it starts to go up, you can see the strength increasing a little bit. Alright, so it's going up, even though the euro might be just slightly less weak than the New Zealand, or I mean, the euro might be getting weaker against other currencies, but against the New Zealand, it's actually leading. But if you see it going up with red here, you got to increase your stop. Try to move it right underneath the low here, because you don't want to lose that much. This is a pretty huge warning that the trade may not work. The trend was one of the strongest ones earlier, and the New Zealand is weak across the board. So you want to stay in the trade, not get out with only a few pips profit, but just use some common sense and tighten your stop. Here's the fib target, but we have incredible strength. It's likely to maybe go through there, but you want to watch this in real time and get out of at least half your trade here if it starts to pull back. So this one, like I said, continued up because it's one of the strongest ones. Usually the 1.618 is the end of the move, so I would get out of at least half your trade here at 73. We'll just round up to 40. You entered this trade here at we'll round up to 80. So you just made 60 pips. Alright, now if you're still in the other half of your trade, tighten your stop here. Usually when they go above the fib targets and come back down under the 1.318, that's the end of the move. If it's super strong like this, it might only come down 5 pips and shoot up again. You never know. So everyone has to live with the consequences of their decisions, but me, I would have got out of both my trades in here and just kind of hope for a pullback to get back in it. I don't like to buy above the upper containment band, so I would prefer a little bit of a pullback. You can see this isn't pulling back, so the higher up it goes, the riskier it is to go. There's less people buying up at the highs. This is one of the strongest currencies. You'd have a super tight stop here because it's maybe a 50-50 trade at best. If it breaks above the high, you go long, and that way if it doesn't, you don't have any losing trade. You might be stuck in a long right here, and your stop has to be underneath the bar's lows. Again, it's a 50-50 trade, and I hate those trades, and you can see this one lost. But you can see, using the currency meter, it's ultra fast, and it really helps you find which pairs to be in. Now, this is very fast in switching from strong to weak. You might want to use some of our other tools to give you an idea of how strong each pair is on a longer term basis. One of those that I like is the FX Power Index. You might want to see the percentage of euro-dollar pairs above their 15-minute bars 20-period average and the percentage of euro-dollar pairs underneath there. You can see starting back from 4, over 80% of euro-dollar pairs are trending up. They're above their 15-minute average, and the New Zealand pairs are weak, which led to that move. And again, at 8, it became one of the stronger ones. Over 80% of euro pairs are trending up. Now that's one tool that you can use. Another one I really like is the new 3-line break. This is relatively new. It's called FX 3-line break, and this measures the swings. And that's for that reason it's different than every other one of our trend tools. If currencies are making higher highs, the swings are making higher highs, it's going to flip that currency to up. We compare all the euro dollar pairs and all the New Zealand dollar pairs. So let me see here. Here it is, FX 3-line break. And you can see again, coming up to 8, almost 80% of euro dollar pairs had flipped up. And again, up here, not the highest percentage, but close to 80% as well had flipped up. Now, if you're looking back to compare this to the Euro New Zealand, notice, at 8:30, the vast majority of euro dollar pairs are strong and dollar pairs are weak. Notice when this flipped back to green was right here, even before the move. And it tends to keep you into the trades. Let's look at the Euro Swiss too. Maybe this one was even. So you might not have even taken this trade right here because the euros were going down. A very high percentage of euro dollar pairs were going down. Swiss pairs had made higher swing highs. So you might not have taken that trade, and guess what? This trade wasn't one of those that just took off and continued like the other two, and this kind of warned you about that. The only weakness in our FX Trend Pro is its speed. It can, because it is analyzing on a bar-by-bar basis, currencies go up, they go down, sometimes they chop around for an hour or two, and then they go into a trend mode where you can pretty much see the euro or the dollar here is weak for a couple hours. By using one of the longer term tools in combination with the ultra fast ones, you know which ones to focus on. For example, if 80% of dollar pairs were trending down using longer term momentum and the daily, weekly, and monthly is down, and you see some real-time weakness coming in here at 8, you're pretty safe selling the dollar. But if, like you could see that Euro Swiss, maybe the dollar in the last couple hours have been trending up and now some weakness comes in, it may not be as likely to give you, a 30 or 50 pip move versus when all the time frames line up. Or at least the real-time time frame and the last 3 to 4 hour time frame line up, you're going to have a lot safer trades. Let's look at some of the other ones. The Swiss is tough because the real-time weakness was there, the daily, weekly trend were down, and then it had some strength. You might have looked to sell the Swiss here at 3, and again, at 5, and again at 7:30. But if you're one of the tools I'm going to be adding to this is the ability for you to create your own currency meter and to set which tools you use and which time frames you use, and many of them can be on different time frames than what these reside on. So if you bring them up after the fact, they're going to look different than what the real value is. We'll leave it running overnight to show what it looks like real in class, and you can kind of blend together different time frames to find something that fits your style of trading. The pound, it's pretty strong on all time frames. 3 o'clock is very strong right here. The dollar was strong at that point, so was the yen, but the New Zealand was weak. So the pound New Zealand, very good trade today. As you can see, just straight up, and even back during those times you have a pretty decent percentage of, there's a lot more pound pairs trending up than down. New Zealand pairs are weak versus strong, and the real-time tools also show you that. You're always better off waiting for a currency to go from underneath to above the hourly, but once it did right here, you can see it shot up 95.12. It shot up almost 300 pips. And you have a nice multi-hour sideways range breakout right here that shot up 40 or 50 pips. Here's my preferred trade. After a strong trend, wait for a little bit of a pullback. This is much safer because most of the time strong trends at the very minimum will come back at least halfway up to their high, so you can make some money. A very high percentage of the time they will go up to the high and make a double top, and then as you can see in this case, continued up even higher. So I prefer to buy pullbacks, or a pullback that kind of Sideways ranges are fine as long as they're underneath the highs. Like this right here, you have a pullback and then it kind of went up, came down, didn't break these lows, and then broke out later. This is be a sideways breakout after a pullback, which I'll just lump in with the pullback category. It's my two favorite type of trades.